Good afternoon, everybody. We're on the graveyard shift, but it's going to be the one we all want to have the conversation about. Over the last year, I've been working with a group of fantastic individuals and stakeholders from across the ecosystem who've been asking the question, how do we create more exits and liquidity events that attract more capital into the ecosystem by creating those successful outcomes? And where in international markets can we attract that capital and enable those exits to happen? Maybe beyond M&As is an exit route or acquisitions, but also looking at public markets and how we access new pots of capital that the African tech ecosystem may not have previously considered. And this afternoon's conversation is going to be one where we're going to cover some of this and the work we've been doing, but actually it's going to be an opportunity to engage with you in the audience, understand what are the questions you have for those enabling growth stage capital to enter the ecosystem. But before we start, we better introduce our fantastic panelists to stage. So could I ask Abby, Tracy and Ido to join me on the stage, and can we give them a big round of applause?
Can you just move them around? Just move them around, okay. And then that's how
So before I let them quickly introduce themselves, we do have our own questions, the topics we want to discuss, but actually we want to put it back to you in the audience to start us off. What are the topics around growth capital for African tech, enabling exits, creating more liquidity in the ecosystem that's going to grow the ecosystem? What are the questions that you would want to ask us as a panel? Have a think about that whilst I introduce my panelists, and we'll take those questions as a way to start, and then we'll get into the conversation. So I'll go from furthest away back to me. Abby, from a quick introduction of yourself and your relation to the topic.
Testing. Okay, fine. Good afternoon. My name is Abi Ajayi, and I am head of primary markets at the London Stock Exchange, responsible for Middle East and Africa. I think in its most simplest form, I'm responsible for connecting capital with ideas on the continent, which means helping companies like yourself get the right capital that you need to fund your growth. We are a platform, of course, bringing providers of capital as well as users of capital on what is perhaps the most international exchange platform in the world.
Yes, so you don't usually find government on these panels, but I think for those of you that have seen me around a few years now, we're a regular agitator, just because I like to believe I represent a government that's done some things right. We have obviously got a burgeoning tech ecosystem in the UK that's done globally quite well. But again, my job is representing the Department for Trade, so I'm in Africa a lot selling the mission, and the biggest challenge I encounter is the lack of a really engaged African constructive narrative for opportunity, other than those that are already active and working on the continent. So a lot of what you'll hear from me is about how to build that, how to get better, how to be more authentic, and actually how to really start to do this at scale. And I'm all about disrupting. I will say that I do have a past with investing, and I have lost money, so in some ways I do think I deserve to be on this platform, but I'll hand it over to Ido. Thanks.
Hi everyone, good afternoon. I'm Ido. I'm one of the 5 partners at Telecom Capital. We are among the largest early stage investors on the continent. We currently are running our second Africa fund, which is a $155 million vehicle investing mostly in seed and A. Across the continent, everything tech, and we're very much after commercial returns and proving that one can make the returns, the global returns in Africa and even above that.
Fantastic, thank you guys. And as a reminder for those who might not know me, Anthony and Kat from Ventures 54, and we're very much the glue between these different types of organizations to enable the conversations, initiatives that support capacity for scaling ventures, fundraising, and enabling exits. Thank you for joining again. I think I've been on various panels with you guys across the continent over the last couple of years, so it's always good to have this conversation. So again, I'm going to go back to you guys in the audience. Is there any questions as founders or fund managers around this topic, maybe specifically related to some of our panelists, that you would want to ask? So show a hand if you do have a question right away, because we'd love to actually get into some of those as well as the questions we have. I think they need some inspiration first and some insights. This is free office hours, effectively, for some very, very well-accomplished people in the ecosystem. So there we go. We've got a question to start us off.
Already brought up a few times exits, so we could go back to that theme. But since that question's been asked a few times, or are we useless? If you could write a mandate for some researchers, what would it be? What would be the mission?
Okay, so just to repeat that, the question was, from the academic perspective, what can be done to contribute to this topic around exits, liquidity that might enable ecosystem operators like this?
And any suggestions on how to research it, methodology, what would you love to know that you don't know?
Okay, so what is the thing that we don't know that we've been talking about the last year?
I feel like we need Abby to go last because that's
Okay.
like a topic he's going to love.
Please.
I actually wanted Ido to go first, sorry, Ant, because we just know how much Abby's going to talk.
Sure. So yes, we definitely do need research. I think we have a big gap of knowledge around a few things. We ourselves at TLCom are trying to spend time and resources around better understanding how value is created in Africa. I think one way is to look at companies they scaled and try and understand what's common to them, which business models, geographies, founder profiles, management profiles, funders profiles and so on contributed to that, and we can be more specific maybe at a later conversation. I would also encourage to I think a lot of the research out there is very USy, which has very little relevance to what we do in many ways. So focusing on how other emerging markets ecosystem evolved in terms of pace, sectors, right sizing of investments and so on, I think that could be some form of guidance for us to how to think about the right path.
No.
Okay. I would say looking at the data set is so small. So you don't have a lot of, and when you look at India by comparison, everybody wants to get stuck into that because that's the second biggest IPO market. So I would say really working with limited data, but also looking at qualitative positions. My ask particularly, and I'd love to see this come from academic institutions, the narrative. The narrative is very weak, and therefore that allows a lot of risk misperception. And you cannot sell and correct misperception when you don't have an authentic opening position. Having some kind of rigor through academia is a very helpful point of view that's sorely missing.
I couldn't agree more. I think it'd be good to get research on what good looks like for companies, which companies have, because I think fundamentally good businesses will always attract capital. For investors that have been able to exit, how was the early stage conversation in terms of alignment of interest? So very clear when you're putting your dollars in, I think it's very important early for the investor as well as the founder management to understand when you're going to need that capital back. I say it in every panel that there is only one religion which capital has, which is return. So first is return my money and then return on that capital. Oftentimes there is that misalignment of interest and it needs to be quite explicit. So having that in place. Also the bit around what does good look like, what sort of governance structures required, which companies have been able to fail. Again, someone might have said it's in another panel, it's around failures. How do we, be bold about failures, which companies have failed and why they failed, so we have that opportunity to learn from it. So now I'll say this unashamedly, the UK investor market it's slightly not as forgiving as it is in the US, where, you know what, when you're coming in, you need to be quite explicit. No, do not miss your numbers. Do not miss your numbers, as the tools will say. As my boss would say that, you know what, don't miss your numbers when you come into the IPO market. Providing that education, I think it's quite important, and I think it's a big missing gap. So be happy to see that research coming through.
We look forward to your publication this time next year on stage.
You may, yeah.
Okay, so
I'd love to.
we have there, we need to do the case study and profiles of businesses that have done that, but really compare and benchmark that to other emerging markets rather than some of the established markets. And another part of that is really we've also got to look at the failures as well as success stories, and be okay to do that and bring that all together to really build those profiles of good governance structures, good leadership structures that can be applied back into the ecosystem. Okay, so thank you very much for the question. Is there any other questions? Anybody's got any questions in around this they'd like to ask? David, I was expecting your hand to go up eventually. You were very, very patient.
So, just based on this the name of the discussion, you have two words in there that interest me, which is finding and next. Does that mean that something has been lost and that there was something that we're trying to now rediscover? And if so, what was it? And what do you think drove why it's not there anymore and we're now searching for something new?
He's gone deep. Within one sentence, you've picked out two very deep questions. I like it, David. Okay, so are we trying to find something we've lost, or are we purely looking for an evolution ecosystem for something now that we need?
You know, I think if you think back over the last sort of 10 years, just more than $20 billion of capital has come into, I don't like to call them startups, I call them early stage companies, right? And if you, I don't know if there's someone from Bristol Bridges in here, they've been plotting that gap, and you see that it was used to be equity now that was coming in before, but now you're seeing a different type of capital coming in. Most of that capital, as I said, all of that capital will need to be returned at some point in time, and in order for you to attract additional capital for growth, that means you must demonstrate exit, people must get their money back, and we're not seeing as much. So a number of these rooms, if you walk across the street, it's the conversation that everyone is talking about. How do we generate exits? How do we ensure that investors get their money back? Because there's the next phase of growth that needs to come through with the new sort of new speak called compute that needs a lot of capital, where AI, deep tech, all of that needs to be financed. And where's that money going to come from? So we need to demonstrate a pipeline. I think it's actually quite cyclical. You need to give investors who put money over the last 10 years some return in order for them to be able to actually sort of support the next phase of growth.
Go ahead.
I'm just going to jump in and quickly say that I don't think it's anything new. I think it's going back to something that's been there, but we've sort of forgot about it. I think macro factors around cheap money in the last preceding 6 years have changed the need to be a lot more strategic. So in our case, the growth market, and we'll come to the sequence questions, which we'll talk about why we're all here and how we fit together, but I think it's really around resurrecting venture markets like the A market in London, where size is a big problem for listing African companies generally, and that unless you're in a couple of $1 billion valuation, the US is really a tricky place to go. So finding a market that's fit for purpose, that's geared towards a growth market, that means you don't have to leave your home market, but you can raise capital abroad, that's adding a new spin on probably where people have misperceptions around what a growth market means for you. So I think it's reinvention rather than something that was totally absent to begin with.
So just that we don't agree on everything, I'll take a bit of a different perspective here. To me, the next is the next layer. In other words, I think what we were able to do in the last, one would argue 5, 6, 7 years, whatever, however old the actual ecosystem is to establish the early stage funding environment. In other words, we now have a fairly healthy and functioning angels, pre-seed, seed, up to A-ish environment. We have definitely not yet established a local and independent later stage growth capital environment. So we're lacking B and up across the continent. It was a little bit hiding when money was cheap and people ran out of ideas in the valley, but I think it's very obvious since money became more expensive, to Tracy's point. I don't think it was there before. We were just not really seeing it clearly, and also we had less companies reaching that stage. Now more are reaching that stage and hitting that gap. So to me, as part of our involvement as an ecosystem, how do we solve for the early growth to later growth funding and of course liquidity?
Okay, thank you guys. David, are we satisfied? And also David is from Brighton, so he can be your data point in the future. Okay, well actually I'm going to use that to jump in, and we've kind of almost touched upon it here, right? Broadly, we're talking about enabling exits and liquidity, and I think that question's been coming up a lot. But I think we can get into a couple kind of tangible areas of that. And we've obviously got investor, government, public market enabler on the stage, so we can kind of bridge that together. And the conversation we've been having the last 2 years as a group is really, how do public markets come into this piece? Do they come into it now? And if so, are they just an enabler of creating better practices for later on? Or are they literally, as we've just talked about, that next layer of capital, bringing it in? Question for each of you. So either I'm going to kind of almost allow you to expand upon what you talked about there, but what are some of the hurdles or barriers you're seeing within the venture ecosystem right now, which are prohibiting or not enabling more exits to come out of portfolios? Then Tracy, I want to jump to you to talk a little bit about what are some of the initiatives, tools, or things you think are coming through that are going to start to do that enablement? And then Abby, finally to you to talk about what's the role public markets will get to play within the answers you've heard from Ido and Tracy, and then we'll jump into a couple more questions from the audience. But I'll start with you there, Ido.
Sure. So I think it's a combination of a few things. First, we're all doing it for the first time. In other words, us investors, founders, funders of investors, i.e. LPs, GPs, and founders, who are, the secret sauce of all of it, are doing Africa Tech venture for the first time together. And clearly we're all learning as we're doing that. And I think as part of this learning, we're lacking a bunch of skill sets, which include how to exit. So I think on the VC side and on the founder side, these are two slightly different things. On the founder side, there's many times lack of this horizon of thinking. If you speak to second, third, fourth time founders in other sort of more developed markets, you would see that people hit the road with a very clear framework in mind of who they create value for. In other words, they know their potential list of buyers fairly early on. They build those relationships. They harness those relationships. If it's a tech component, it will be around that. If it's a market access or market coverage, there will be a strategy around how you make this valuable to your potential buyer and so on and so forth. I think in Africa, this level of thinking or horizon of thinking is still lacking to an extent. On the investor side, again, because we have not done it, we don't really know how to prepare companies to that. We have seen companies going, including in our own portfolio, into processes being sort of far from ready. The data rooms are not at the quality they need to be. The financial projections are not at the quality they need to be. The ability to, tell a story that it caters to the right set of buyers and so on. The calibration of how much money you have raised to your exit expectations. All of these things need to be very thought out. I think we internally have put a lot of effort in and around that in the last 2 years to build our internal capacity to support this with our own portfolio. But as an ecosystem, also for us, there's still a long way to go on how we bring prepared companies to be acquired or to be able to list, which are two very different tasks.
Quick follow-up with that. Is it a case of not being exit ready, or is it a case there's just not a willing buying market?
It's a bit of a combination of both. So yes, clearly we're not the most attractive geography on earth for global money allocators, but we are an attractive expansion market for several geographies. So for geographies that are lacking, population growth, that are lacking economic growth, and so on, this is a very interesting growth market. This is sort of an uncharted territory on many fronts. Of course, there is a spend power issue. There is, currency, FX, and so forth issues. But with that, for companies that have established themselves and are in extremely competitive spaces elsewhere, this is actually a very interesting place to expand into. This is one. The other is by itself is a big market. So there could, you could have consolidation plays here, like we saw in India, like we saw in Latin America, with local champions consolidating, building muscle, and going public. So I think, there are ways to do it. We've not been very creative. For instance, we have seen very little consolidation or platforms building in a single sector here, like you saw, again, in other emerging markets over the past 7 years. It's a matter of intent, and it's a matter of expertise. And I think now, we're starting to have the intent. We need to build the expertise, and we can get there.
Okay, thanks, Ido. And then Tracy, I guess over to you on the other side of the coin then. What are the things that we can be doing, that you're seeing or working on, that can be enablers to get us down the pipeline and pathway to the things that Ido's just touched upon?
Yeah, I mean, basically, I'm going to borrow a segue from you, Ido, in the sense, the thing about knowledge and learning. The thing that struck me, and the reason why we came together and we inserted LSEG into the conversation and we forced ourselves as government to be more proactive, was actually the level of knowledge amongst most players, and I've sat in many roundtables on the continent and including London, is actually way lower than what you realize around exits and IPOs, based on the evidence that it isn't happening. And when you actually say to a lot of people, what's the difference between a US and a UK IPO, most of them can't answer the question. So it's not an attack on anyone, but it's to point out where the ecosystem's at. So when you had that challenge, the other thing was to realize that we work in very sort of isolated silos. So why we took a working group, and I must point out that we've got the capital investor on my right, we've got the ultimate marketplace on the left, but missing from us today is obviously we've got the biggest buyer potentially of IPOs that will be on the AIM, for example. We've also got 2 or 3 integral advisors, being the law firm, being the general advisor, and then being the sponsoring bank. So you have to bring the whole ecosystem together because everybody has a vested interest. And why does government have a vested interest? Because we want to see growth. If we don't get this money, if we don't get these exits, we won't get more capital, and ultimately, really, we'll do less trade. We need to see capital at scale coming into Africa to see it as a viable trading partner. That's why we're here, and that's why we're trying to agitate. My last quick comment, I'm talking a bit much, Abs, is deregulation. We as the UK have embraced this. Some might say we haven't gone far enough, but hopefully it's a time of more considered sensible deregulation, not just deregulation crazily. But we need to make our markets more accessible and to be mindful that without a little bit more considered deregulation, we're not going to achieve growth. So that hand in hand with the more holistic, tied-up partnership is the way that we've approached it.
And I think one of the things there is that obviously we touched upon this from a UK perspective for our working group, but actually everything we're talking about as a practice could be applied to any offshore market investing in and supporting the continent as well. So you can apply that for your own lens or frame from other markets you might be looking at. And so, Abby, let's then lead this into the public markets. We've been in several rooms together where we talk about IPOs within Africa, and everybody's scratching their head saying, how is this possible? How is it feasible? What's tenable? And often by the end of the conversation you have, people are allowing to have the conversation with you because they've understood it. So what role do LSEG and capital markets, potentially public markets, play within this conversation and lead to the finding that next growth capital?
I think the first thing is education, because I mean every time people don't know, you don't know what you don't know. So I think my first job is to educate on the possibility. When I tell them about there's a market in London where you can come in with $10 million in revenue or less, an IPO, and get investors to support your next phase of growth. It's not all companies that are being built that need to be sold. Sometimes you have an opportunity to grow into your own success, as we say, where you can essentially have access consistently to capital that would not require board seat from you, that would not require you to do other things, will trust you to actually be able to build a business. So that's the second piece. 3, as an exchange, we recognize that we are quite international in our nature, which means that we work with local exchanges across the world. There's representation from 100 countries on the London Stock Exchange, including, and I'll say this, that there's 110 African companies listed on the LSE, market cap in excess of $100 billion. And those companies are dual listed in other markets. So there's 21 African companies represented on the LSE. 50 of those companies are dual listed, which means the other thing we'll do is also help in terms of capacity building. So quite important to say, like, what does good look like? What's the size of the company that could effectively attract capital? How should we organize ourselves in terms of governance? If I'm an investor, can I seek an exit on the exchange? And I'll tell you this, that, you know what, that's one exchange that supports VC as well as private equity backed companies than any other one in the world. In fact, in the last 5 years, we've had more than 27 VC and PE backed companies IPO on the LSE. And in terms of capital, and the other thing which we're doing apart from the reform is trying to unlock additional pension as well as insurance capital to back companies listed on the LSE. Over the last 3 years or so, we've been going through what we call perhaps one of the most significant reform we've done in terms of our capital markets. If you're going to be the platform that attracts capital for users as well as capital, provides capital, those who are providers of capital, then you need to ensure that the companies that are coming in have a much more flexible opportunity to get onto the exchange. You using that platform as one where you can grow into new markets, where you can expand your access to capital, where you can get into new verticals as you see fit. So I think just to close, the big thing as an exchange, as a public market, is we want to ensure that we democratize access to capital, and we want to continue to do that. And it's not just for UK incorporated companies. We also have from companies all over Africa. I think that's what's more important.
Okay, fantastic. So I guess kind of reflecting on this, the big thing here, right, is we've got, Ido, your role here is to kind of bring through the proverbial deal flow, get these companies ready to scale and grow. And then Abby on the other side is bringing through that future, let's say, generation of capital allocators that might not normally otherwise look at Africa right now about public markets as a potential vehicle. And then Tracy, that kind of role you're playing in between is bringing all these stakeholders together and building that stack, thinking about the future. And I guess the piece back to the ecosystem is, if you're a fund manager, is when you think about this, and it's certainly the conversations we've been having with various stakeholders, is yes, you might have a specific role to play, but really you have to go and build that stack out alongside your fund, both bringing your deal flow through, but where is that future capital allocation coming through? So back to your original part, you can make them investment ready for that next wave of capital. I'm conscious we've got about, how long have we got? We've got about 15 minutes? No, we haven't. We have 7 minutes because our original time was still 5:20. I'm going to quickly then jump back to the audience. Questions from the audience? Any things you want answering? Yes, we've got a question here. Everyone else, have your hands up ready to go. But the gentleman here in the dark red, I think. It's very dark. I can't see the exact color.
It's actually wine.
Wine, sorry. New tone. Didn't realize.
Okay, thank you so much. My name is Abba Emmanuel. I'm the founder of Waste to Light Limited. So I just have a question, especially for founders in the hardware space. What are the alternative funding models can we explore? And what are the significant factors investors explore to evaluate the growth plan of African startups? And how can these founders better position themselves to be able to secure funding? Thank you.
Happy to try and address. So I think first, hardware, software, whichever business model, technically should not make a huge difference, though there are investors with different flavors and different areas of expertise. What I would say is not all investors are created equal, which is great, plus not all companies are created equal, which is also great. So not everything needs to be VC-backed, and not everything is a fit for every fund. There is a big question, I think, and we meet north of 1,200 founders a year. There's a big question of fit, first and foremost, to the specific fund. In other words, if you come to speak to us, there needs to be a world in which, if everything works, there is 100 million of proceeds, and we will probably own sub 10% at exit, so you can run the math at the end of the journey. If you go to a fund that is 20% of our size, that threshold may be very different. So they may want 20 million of proceeds, which means maybe your journey is quicker and sweeter. If you sell the company for 70 million, everybody's very happy because you own half of it and they own 10, 15, 20% of it. But for us, it doesn't work. So these things are very important to understand at the gate when you start engaging with funds. Which is right for your stage, which is right for your ambition level. And at times, the nature of capital is not venture. It could be debt, it could be SME funding, it could be all sorts, MES, quasi, it could be all sorts of things. It really depends on where you want to take the business. If you take money from people like ourselves, you're committing to wanting to go the whole journey. And by the way, with a higher chances of failure, right? The chances of exiting at the numbers we strive for are sort of 1% from when you start the journey, vis-a-vis much higher percentages to achieve a lower outcome that can still make you a very happy person. So I would just say it needs to be a fit for purpose in that sense.
I think one thing I'll also add to that, he's not on the stage just today, but Simon Olsen from Deloitte's M&X team, who's particularly focused on Africa, he does a boot camp on IPO readiness for companies. And I think there's about 12 blocks to IPO readiness, and actually about 9 to 10 of those blocks are just investment readiness at any stage for any type of exit and growth. So I think if you can look at frameworks and models like that for that Series A plus rounds and work your way back, you may not be having to tick all those boxes, but it will give you an idea for what are the later stage allocators looking for along that journey, particularly when it comes to exits and what your business needs to have, so you can best prepare your business from a due diligence perspective to grow and scale, but only put the best practice of governance around it. It's going to make it a lot easier for investors to engage with you, but also think about the investors you're going to engage with after that first round and that second, third round as well. But thank you for the question. Any other questions? Yes, Joe.
Hi. I know we're all here for Africa, right? We're passionate about how we can help the continent grow, but we can also admit that there are more mature emerging economies out there. So I'm curious to hear what each of you in your different fields have seen or have taken lessons from other geographies or regions and how you are applying it in your respective areas. Thank you.
Great question.
Yeah. So I also look after the Middle East, and as you see, there is a bit of intentionality in that region in terms of helping companies to grow. You're seeing aggregated capital, state-sponsored capital, helping companies, encouraging them to go public, cornerstoning IPOs, providing boot camps for founders as well as companies on the IPO process, supporting them with temporary cash flows. In fact, in one particular instance, they actually have a state-sponsored IPO fund where as a company, as a mini company or as a scale-up, you can go through that process. That will introduce you to investors, take you on an international roadshow as well, get you to understand what it takes to actually list in a local market, also list internationally, but of course with a big focus on listing locally where that is possible. And I think that's where we need to also see, that's what we need to see in Africa, where you can help companies balance the burden of wants and needs. There's no better, you can achieve a twin objective of being on your local market, listing your local market, and also listing on an international exchange like London, where, again, London would act as an extended shopping window for international investors into that company or onto that exchange. So that is one thing I've seen, at least in the Middle East. So.
Yeah, and I'm going to answer that question in two different ways, and it's a kind of a love-hate question, because the first point I'd say is it's difficult to answer the question without getting to geopolitics, but fortunately I work for a government that believes in fair trade. So where I will go with it, though, is to say that the challenge around Africa, when I'm selling the narrative and I'm talking to the City of London, London's success is that half of its assets under management of the £8.5 trillion, and including half of its stock exchange, is foreign money. So it's a classic example of where it doesn't matter where the border is or where you're coming from. It's the belief in that there's this combined ecosystem of creating capital at scale. The flip side, when I'm in Africa, I'm incredibly cynical and hard on investees, and because I keep saying to people, when I sell Africa, I get the message, investments like water, go where there's least resistance. I get told, I can go to Asia any day of the week. That's literally what I get confirmed. Why Africa? What's the growth story? And don't tell me it's growing populations. People's eyes glaze over when they hear that. I'm even getting LATAM at the moment. So it's really about pointing to high-yield assets. It's about pointing to what I call must-have disruption rather than nice-to-have disruption. It's not another e-hailing, riding app or whatever. It's really great, significant business that's going to be around for a while to come, and that scales. So it's a really tricky position, but I think it's a great question, and I think it's one that we don't ask enough of ourselves, is that this isn't the whole world, and everything we're doing here is brilliant, but it's definitely not enough. So good question.
I agree. I think we spend a lot of time internally to look at other markets, more so Asia than Latin America. We find more similarities there, but really understanding the drivers of the business models, the sequence in which infrastructure for different sectors was built, what were turning points, what affected fast growth in certain companies, and try and it's never one-to-one, sadly or happily, but definitely try and reflect on those lessons and see what does it entail for us. I think I've touched earlier on in geography consolidation, which in India played a giant role. If you look in 21, 22, I think 90+% of exits were actually in India, M&As, plus a very rich local IPO market. I think one of the reasons this group got together, among others, is that Africa doesn't have a single market with that depth that India has. JSE has its own limitations. So it was clear for us that we need to explore as an ecosystem more opportunities. London is definitely one of them. So, a fit for purpose listing a market that we can build a story around, that we can build a narrative around, was one of the causes. And I think that came from looking at the story. Most Indian companies actually did not go list in the US, they listed locally.
Fantastic, guys. Now, I know we're about to be played off for the music, so I'm going to go to one final point. Based on this conversation, finding the next growth, capital for African tech, based on your role, your position in the ecosystem, got a big room of people here. How should people engage with you with relation to this conversation?
In two ways. First, if you're building Africa's next unicorn, please come and meet me outside. But that aside, I think we're trying to, alongside being the best fund we can with our own portfolio, also take an ecosystem approach here. So both for managers and for founders, of course, who want to think through what does it entail, the logic of growth from very early, to early growth, to exit, let it be via an M&A, or more specifically in this conversation, an IPO. Very happy to, from an investor perspective and from someone who's been in this ecosystem for 15+ years, share some lessons and thought that we have built internally on how to think about these journeys. Not that we have all the answers, but I think we have a bunch of questions to help you reflect on that.
Thanks, Ido. Tracy?
Two ways, I'd say. One is, if you're an investor, you're an ecosystem, an intermediary, whatever you're doing, don't just think about your role in the value chain. Think about at least the one either side of you, because invariably there's going to be a challenge there. And the second point I'd say is the convening in the group, and we have a shrunk group here today, but if you were to put all of the advice, and I always say to people, if you were to bill Abby's time, definitely not mine, but Ido's time, and some of our other advisors you're getting phenomenal free advice. Go out there, ask those difficult questions, seek it out. You'll be surprised at how helpful and what a great ecosystem actually exists. It's not all in one great compiled textbook or one place, but there is a lot of good free advice out there. And engage with us. Thanks.
So I'd say if you are a founder and you're a founder of a fundamentally good business, which I believe should actually have access to capital, and you're thinking about your next phase of growth, come talk to me so we start thinking about what does good look like. Should you be thinking about IPO in your business, or are you a candidate for an IPO? Or perhaps you want to attract additional private capital, then of course I'll be very, very happy to speak to you. And then of course for the portfolio owners in the room, we should have a conversation about your portfolio strategy, which companies should IPO, because the greater successes you get or the inspirational stories you get will help you attract additional companies sort of going forward. Very important. And then I think the final thing, which I also say, is that next year we should launch as the LSE what we're calling the first regulated crossover market in the world, called PISES. It's called Private Intermittent Securities Capital Exchange System. Sorry, it's a mouthful. It's called PISES. And that would encourage companies to stay private longer. It would allow VCs and private equity guys to actually be able to sell down, so only be able to do secondaries there. So a good opportunity for you to enhance what you call your distributed capital to putting your DPI ratio, if that is also important to you. So please, happy to have a conversation.
Fantastic, thank you guys. And I think just to kind of wrap that up, finding the next growth capital for African tech, the answer I have in my head listening to you guys now is twofold, is where is the capital not in the market currently sitting, and how are they investing into tech and other businesses, and what are the exit routes they take? And IPOs might seem like a non-common practice in the African tech ecosystem, but they are a vehicle commonly used by other markets that have matured out, and that's where the capital's coming in. So how do we see whether it's an IPO or other exit vehicles and how that brings capital in and we can apply it to the ecosystem? And then secondly, how do we as investors or founders look far forward to being better exit-ready, accomplished businesses that are going to be more attractive in those early conversations, early days as these new investors come to the ecosystem? So I think I'm clued up a little bit more than I was about 45 minutes ago. We hope you are as well. Thank you for joining us for this final session, semi-final session of the day. Enjoy the rest of Africa Arena and the week ahead. And yeah, thank you to my panelists.
Thank you. Good.